Okay, so welcome to our first session of stock analysis request, stock discussion, or ask me anything. So you can basically ask any stock analysis request or ask anything that's related to trading. If I can answer, I'll answer you. So please note that for this session, right, we will do a recording, but the video itself, right, the recorded video itself, it will be made publicly available because it is also meant to be like a form of self-promotion, so that like outsider knows what we are doing, but of course the session itself is only for subscriber, meaning only those who can subscribe can come in and ask questions. Okay, so this is just a disclaimer so that you know that whatever you ask or whatever I answer, it will be out there in the public. Okay, so let's start with the first question. Can we short US stock in their territory like Zoom, Palantir, and Crosstrack? Okay, so shorting is something that I personally don't really encourage, mainly because it is risky. It is quite risky compared to long position, because if let's say these companies suddenly get suspended or they somehow get delisted or what, especially those that are coming down fast and furious, right? Like something bad is going on. Yes, they are coming down, but you are very happy. But if one day they just get suspended or what, right? Then your short position it will be in a very big jeopardy lah. And not only that, right? The short interest rate is also slightly, it's also play a part in terms of your cost. And lastly, I personally always think that if there are things to long, right, then you wouldn't want to short unless there are really nothing out there to long, or the entire market is very, very bearish. Like for example, let me bring up the chart. During the COVID-19 drop, like here, during the COVID-19 drop here, or let me bring up the STI, the Singapore market also. Where's my STI? Always very hard to find. Excuse me. During the big COVID-19 drop, right, what you will notice is that for 10 days straight, the scanner is totally empty for 10 days straight. And when we have that kind of result, right, and especially when the price suddenly dive below the 200 days moving average or what, right, it is a very clear sign. It's a very clear sign that scanner empty, the price are going down the long-term moving average, then the market is definitely in a very big bearish period. And when that happens, right, we will definitely look out for a short position. But when the market is like somewhat okay, still healthy, but it is just that doing like a bit of a short-term retracement, right, then we generally do not really want to go and kind of like short the market also, because there are a lot of other companies that you are able to long. It is only during this period where you will realize that there's almost nothing to long. There's like zero stuff to long. So it is because of that reason that I don't really encourage to short. And for those who might not know, Nimbus Capital have a short scanner also. We have a short scanner that once in a while I will kind of like scan it. I won't scan it every day, but once in a while, right, when I see all the signs of like market is going to go down, die very fast, right, I will definitely scan. And for the year of 2021, I used that short scanner a couple of times. One time during here and one time somewhere here. And in fact, the short scanner doesn't really give us anything also, which means to say that actually a lot of the counters are still somewhat surviving, and it is not really a good sign to short. So the irony is that when we actually come to a legitimate situation where we can short the market, right, we don't usually want to short individual counters, because like I say, individual counters can get suspended. It can something funny can happen to them or they get like declared bankrupt and then kena delisted, that kind of thing. So normally, right, we will always try to short the index. Whenever a shorting opportunity occurs, right, shorting index is the safest and the cheapest, because if you short like S&P or on a CFD, they don't really charge any commission and the margin is very low. So most of your funds are still free to catch the long position when the market recovers lah. And that is also another point that I want to point out, because sometimes, right, the stock can like be like that, and then you short, then one day it will just like suddenly go up like that. So you always have to be watching out for this kind of price movement lah, and you are on that time limit where eventually your luck is going to run out. Because if you think about it, right, there is no company out there that is like purposely trying to lose money and make their stock go down lah. I mean, of course we do have weak companies and all these kind of stuff, but of course, in a grand scheme of things, right, if we have things to long, we will rather long than trying to play the short position. Okay, next question. Trade journal for 0% drawdown trades. Do we use the entry price? Yes, a very good question. For the trade journal entry, right? Please, if your entry have no drawdown, then you just input your entry price law. Then the drawdown will be 0 lah. Yes, you are correct. If entry price for suggested trade, for example, AEM is at $5.12 and it gap up one day later and we didn't get in, but 5 days later it dropped to 4.90. Is it okay to enter then? Okay, so what you are saying is, let's say I have AEM here, and then the entry price is like this lah. Okay, so what you want is what you are saying is that, okay, next day it gap up, trigger the entry, and then 5 days later it come back down, so it become like the entry is no longer trigger again. Okay, so in this kind of trade, right, you can choose to enter, but this is definitely your decision lah, because sometimes personally for me, right, if it comes back down, then definitely, of course, I will look at the trade recommendation to see if there are any other trade available also lah. So for example, right, let's say you miss the trade when it triggers, but after that it start to come back down. Then when you notice that it come back down already, right, then just nice during that period there are other trades set up, right? Then the question is, you need to ask yourself, do you still want to go in this trade, or will you prefer the new trade recommendation that came up? So the question here is whether or not you deliberately wait for the price to come lower so that you can get a lower price, or is it that you forget to go in? You when the day of the breakout, you just simply not there lah. So typically for breakout trades, right, where we are waiting for the price to break out and then trigger, and if you miss it, right, and price come back down, right, then I would say that it might be better for you to go and look out for other trade recommendation, or you wait for that breakout again, then it will be better also lah, since we are looking for the breakout. But sometimes, right, like those trades set up where the entry is like right at the current price, you can choose to enter when they go down lower also. But whenever you are trying to enter a price that is lower after the trade recommendation come up, right, I will strongly recommend that you don't go in while the price is coming down. You go in when the price come down and then start to recover. This is because, I mean, from our end, we definitely wish that we give the trade recommendation already, the trade will go straight to TP. It wouldn't even retrace. I mean, that is our wish lah. We wish that 100% of our trade will be like that. But sadly, in reality, this kind of trade doesn't happen often. And if you are quite aware of our webinars, right, you will notice in last year, 2021 data, right, we have 25 trades that went immediately to TP after we enter out of 136 trades. That is somewhere about 15 to 16% like that. And for most of our trade, right, we will expect to see some form of retrace coming in. So key thing is that whether you enter here or you want to enter at the bottom right, at the end of the day, as long as the stop loss is not hit, the trade is valid. It is just that when we go for breakout trade, we really hope that it can keep continuing to go up with the momentum lah. But when it comes down, right, the trade is still valid lah. Please look at chart of SECOPX and OLAM. Okay, let's take a look at that. SE, C limited. C limited like very jialat leh. This one like very jialat. So this is in the same boat as Alibaba and Tencent and that whole bunch lah. I think recently this retail trade sector is not really doing very well. Like even Amazon is like a little bit kind of like underperforming lah. So if you look at Amazon for the past last year, right, it is one of the underwhelming counters lah. And I think for a company like Amazon to do very bad, is Asian counterparts like Alibaba, SEA, Tencent, all these kind of companies, it is looking to be quite bad. This counter, right, it is in a very long-term downtrend already, and in fact, I think this long-term downtrend it kind of like started together along with Alibaba lah. I think they are like side by side. Actually, Alibaba started way back in like 15 October, where SEA is like somewhere around 19 October, but this one is 2021. Alibaba is like way back in 2020 already. And normally, right, for this kind of downtrend counters, right, it will try to find like a support. And from the look of this chart, right, I would initially think that this area will be a very good support. This area will be a very good support. So normally when price start to like sideways, like consolidation like that, right, like this kind of area, they tend to be a very good support, because what that price movement is representing, it is saying that there is a lot of interest in this area. That is why price go sideways there for a very long time, because both the buyer and seller are interested in this area. But this area get broken down like without any kind of consolidation or without any context from like the buyers or what, right? And it does seems to signify that there isn't any buyer present here lah. So it will go down some more to find the next level of buyers. Okay, sorry, my bad. Then the next level of so-called support, right? We don't really have any next level of support, maybe all the way back in this 2020 level lah. So of course, even though the previous consolidation is way back here, when we discount this area, right, it is not to say that the price will still go all the way down also. So it is now in that limbo state where it will just like sideways down until it kind of like find a support lah. So there can be a support layer anywhere between here lah, anywhere between this level, and it is definitely very hard to sort of like say it will be at this level, it will be at that level. But the only time where I would think that okay, this area is a confirmed support already, right, is when you have this kind of chart pattern, when you have something like this, and then it kind of like goes sideways, and then finally it break out of the resistance. So if you want a good example, right, I can show you Tencent. Tencent is a very good example that you can look at. So the price come back down, and then it will hit a point where it goes sideways. So this sideways movement, right, is the buyers are coming in and the seller are selling also. And now both the seller and buyer, they are very happy with this price range lah, very happy with this price range. But the thing is, they will keep buying and they will keep fighting out until at one point, right? Either the buyer no more or the seller no more. So if the seller no more, right, then this one will recover. Then if the buyer no more, then this will continue to drop. So just because we have a sideways movement, it doesn't mean that this one confirm recover already. No, it is just consolidating. So that's why, right, we don't buy into a consolidation. And even though in terms of risk reward ratio, you want to like buy at the bottom, right, you can still end up in a situation where this thing can like that, and then go down some more, or sway that time that you buy, right, it goes all the way down. It can happen, which is why I always will wait for a resistance breakout to buy. And I think for SEA, right, we are still a very long way from that. I think maybe even right now, who knows, it can go sideways, but I will want to see like a breakout like that. I wouldn't immediately buy right here. Yes, correct. I will only enter when it form a higher low. Sorry, one by one. I will come back to the other two counters. Okay, so let me go and see others, see others requests first. So it's much more fair, lah. Okay. What is your opinion in investing gold ETF? Gold ETF. So GLD, SPDR, Gold Trust. Let's take a look. To be honest with you, gold is not my area. It's not my area because I mean gold, unlike stock, it is its movement is slightly different. And if you want me to look at it in terms of the technical, right? The technical itself is unlike stock also, because for example, right, stock has a very clear-cut pattern when it is trying to move in an uptrend. And when you can find that pattern, right, you can actually achieve a very high percentage of winning rate. But for commodity like gold, oil, or maybe like agriculture like wheat, soy, right, the way they move, right, is very different. The uptrend pattern is different, or in fact it generally lacks any form of pattern. And not only that, gold is also kind of much more how to put it in words, it is tangled to other commodities, such as it is linked to USD, it is actually linked to oil also, it is also now it is linked to all the crypto stuff, because now we have all the Bitcoin and Ethereum, all these coming in, right? Gold tend to lose its status as the anti-government, anti-fiat currency, that kind of stuff. So it is very hard for me to do a proper technical analysis on gold. And this one, I mean, I also don't want to give you the wrong thing, the wrong analysis. So I will honestly tell you that it's not my area, and I don't think I'm in a position to give you advice. I don't think gold is old-fashioned. I think it's still gold is the longest surviving currency ever. It has been with human civilization since like the beginning of time, when human discover this gold. In fact, it is the physical property of gold that make it a good currency, because its purity is uniform. You can melt and cut gold down to any weight, you can divide it as small as you want, and it doesn't corrode. So its physical property, it meets all the so-called requirement of what a currency is. It is limited in nature, and I think that is what fiat currency is trying to replicate also. In fact, I mean, I think you all should know that USD was once backed by gold. In fact, if you own a USD, it's the same as owning gold. But now we have all this cryptocurrency coming in. So with cryptocurrency and all these, right, the gold is I personally think that it is a kind of product that is banking on the fact that crypto will fail fiat will fail, so end up it's still back to gold. Yeah, maybe I would think that those who want to invest in gold long term, right? This one is invest long term, not trading on CFD for short term game lah. Those not counted lah. Those who are trying to invest in gold long term, right? I would believe that there's no judgment, not judging you. I pre-apologize if my words offend you. But those who invest gold in long term those are hoping everything will fail. The world will crash, the Bitcoin will crash, USD will crash, everything will crash, the US government will crash. Yeah. Yeah. Okay, next. Crosstrack. Okay, let's look at Crosstrack first. So Crosstrack is a counter that I think previously I made one analysis on, but unfortunately that analysis was hit with a stop loss. And after it was hit with the stop loss, right, it also went below the 200-day moving average. So just want to clarify with you all, right? Sorry, just want to let you guys know that this 200-day moving averages is like a guideline, a rough guideline to see if the long-term uptrend has been broken or whether they are still maintained. It is not to be used as an entry criteria. Moving averages are never to be used as a entry criteria. That's my personal opinion. So currently Crosstrack looking a bit bad, looking quite bad. And what you will notice recently is that interest rate does have effect on the stock market, but of course, in my recent sharing about interest rate, right? What I meant to say is that it is not that interest rate doesn't have effect on the stock market, but rather you should not just suddenly stop investing or stop trading because of interest rate. Yes, those companies that are affected will definitely be affected, but of course, as trader, as investor, we can choose what we want to invest. And even S&P 500 or Dow Jones, right? They are quite diversified in a sense that things like rate hike, all this, right? It will have very limited impact on the trend, provided that every other factors are still bullish. For example, the earnings season, the business still doing good, blah blah blah, or all this kind of stuff. Okay, so all those counters that are doing quite bad recently, most of them, right, they do have a very high, I would say, debt, very high debt, and it is because of their high debt and their inability to create free cash flow, right? Which caused this counter to drop. And I think Crosstrack is one of such counters. So you will realize that most of their cash flow is coming from their debt. They actually took up a very, very big loan to sort of support their operation. And it seems that due to the rate hike, right, I think their debt is going to be like the amount that they have to return, all this kind of stuff, it will be weighing down their performance, and now they need to generate even bigger revenue, bigger earning to combat this kind of thing. So I think that's the reason why Crosstrack is dropping. And along with Crosstrack also, right, there are other counters whose the debt level is quite high. They are the one that is dropping quite a bit also. So in this case, right, in this case of Crosstrack, it is in a downtrend. It's currently in a downtrend now, and I think this pattern here is a bit concerning also because we have one attempt at trying to like break out again, but this is what I mean by when something is consolidating, right? It doesn't mean that it is confirmed going to go up. So you can see that it is consolidating here, meaning there are buyers, there are sellers, but at one point, either buyer is going to run out or the seller is going to run out. We don't know, and we cannot assume. And usually, right, usually whichever that runs out is whichever the trend that is currently in. So in this case, the buyer kinds of runs out and the market drops. So the market continue to drop. So maybe at this point, right, we might see another small support coming in because this was like the previous support level. But if let's say the seller are still overwhelming and the general market condition is not good, right? Then I believe Crosstrack will still drop some more. Sorry, let me let me mute. So yeah, I believe my opinion on Crosstrack right now is a little is on the bearish side. Next, let's look at how do you see REITs if long-term collect dividend? Okay, so if you want to hold REITs for long-term to collect dividend, right? I think that's a very perfectly good plan lah. But of course, your choice of REITs must be good. So in Singapore market, right, there's actually a lot of trash REITs out there like that are very, very bad. So for example, I think in one of the webinar, I mentioned this counter called the Eagle H REITs or don't know what. When they were first IPO on the Singapore market, it was like, I don't know, giving very high dividend. Then at one point, right, the Eagle, don't know what, Eagle Hospitality REITs, it keep dropping and dropping. It dropped to the point where it is supposed to give out like close to 15% or 20% dividend because the price have dropped so low. So a lot of traders go and buy because they thought that they'll be getting like 15 to 20% dividend, but end up that company, they declare bankrupt or something, they got delisted and they didn't even give out the dividend. So a lot of traders got trapped lah. And not only that, we have also a lot of other funny REITs. Like, how is Sabana doing right now? Yeah, you see this kind of REITs, right? It's very jialat. I mean, if you see the price of the REITs going down, most of the time, right, at some point, they are also going to reduce their dividend payout because the fact that the share price coming down means this REITs is not doing well. So at some point, you see, initially they give out like 3 cents, 2 cents, 2 cents, then 2 cents, then that was like here. Then now price is like at 40 cents, right? It's giving out like 1 cent, 2 cents, and the frequency like 0.5 cents. The frequency is also now like half already. You can see last time they pay out like 4 times within a year. Now it's like 2 times within a year. So as the price go lower, as the REITs cannot perform, right, the dividend also drop. So when you want to go for REITs, right, I highly suggest that you go for more well-established REITs lah. Like for example, Mapletree, for example, Capital Land, all these kind of more well-known stuff. And another thing is also that when you want to buy REITs for like a long-term dividend play, right, you have to keep averaging down. Not sorry, my mistake. What I mean is not average down, but you need to know how to dollar cost average properly lah. So that like you don't end up like, for example, let me give you an example. Let's look at Mapletree. Okay, so let's look at Mapletree. So you can see that Mapletree is actually one of the so-called better REITs lah. Better REITs. Okay, so let's say maybe you buy here. Let's say maybe you buy here and then you got your dividend and the price go up and up. So you should occasionally keep adding more position. Even if it suddenly drop like that, right? You should keep adding more position. So consistently dollar cost average so that eventually your holdings will be quite big in a sense that your passive income will be sufficient enough lah. And that is personally my strategy also, but it is just that I don't buy the REITs lah. I buy STI ETF. So STI ETF, the dividend payout is somewhere about 3 to 3.5% to 4% like that every year. And within the STI ETF, right, there are all the Mapletrees. The Mapletrees are part of the STI constituent. Capital Land is part of the STI constituent. You also have Capital DC REIT. So these are all, I would say, reputable REITs that are I mean, safe lah, compared to other funny stuff lah. Okay, so and because STI ETF is an ETF, you don't run into risk like if let's say one of the risks is declare bankrupt or what, right? Your portfolio wouldn't be affected lah. It will simply get kicked out of the ETF and then it will get replaced by another stock or something like that. So if you want to buy REITs individually, right, please be very careful and make sure that your fundamental analysis is on point. Don't look at the yield alone. Don't look at the risk drop so much and then you think, wow, this one 10% already, 20% already, you go and buy and then end up they will cut your dividend also. And I think this one not just happened to REITs lah. Like you look at Genting Singapore, when it dropped so low, the dividend was like 5%, 6%, but after that they cut the dividend also, then become very like you might as well like don't buy at all. Your recent video, 3 big US tech stock. Can I check if the trade setup is classic? Need to know how to manage my rate. Okay, sorry. Good question. I think I didn't mention in the big three. The big three. Okay, so the big three are Microsoft, Google, and Apple. Okay, so this big three, right? They are considered support because they are at the support level. Okay, so it's quite simple. They are at the support, and that was one of the reason why I mentioned you don't buy all of them. Maybe buy one enough. And previously, if you already own Apple, right, I think you are fine already lah. Don't even have to touch the rest already. The normally support trade setup are those that are lingering at the support there. So you can see that currently the tech sell down is still selling down. The tech sell down is still happening. So we don't really want to be overexposed to all these tech counter lah. Okay. Sorry, I'm a newbie, probably gonna ask a lot of dumb questions, but although we depend more on technical analysis, are the key or really fundamental analysis that we should not ignore? Okay, so this is a very good question. Okay, fundamental analysis or what, right? They are very, very good. I mean, they are definitely relevant, but the thing is, for us traders, right? For us retail trader, how can you accurately analyze a fundamental aspect? So maybe if one day you I think now this one very recent one, Facebook recently have a news that says they got don't know how many $1 million of lawsuit or something like that. Let me go and find FB lawsuit. Okay, this one. Facebook faced 3.2 billion UK class action over market dominance. So we see this news definitely more towards the fundamental aspect. So now you see that it is a 3.2 billion lawsuit. How would you put that fundamental into your trade plan? How will you integrate that fundamental into your trade plan? Are you going? So one very simple will be okay. Like Facebook is facing a lawsuit, so okay, I'm gonna stay out of the trade already. That's one simple way you can do that. But the thing is, okay, maybe Facebook face lawsuit, Facebook face this, Facebook kena this, kena that. But during all those stuff, right? Let's say what price is still sideways and the support is not broken, right? Then we can say that there are buyers coming in. So the key question is, why are buyers coming in even though all these news are coming out? Of course, we wouldn't know because behind the action, right, there are people with more access to information, more access to people with the correct knowledge to analyze all these things, to make all these kind of decisions. And these people are employed by big fund managers and big smart money institute, all these that are making this decision. They can analyze all these data and they can probably go to the point where, okay, will Facebook win this lawsuit or not, or will Facebook end up paying this or not? They have the knowledge, the manpower, and the resources to make all those kind of analysis. So once they make that kind of analysis ready, right, then whatever their action is, it will appear on the chart. But for us retail trader, right, we don't have the knowledge. We don't have the knowledge to make that level of accurate analysis. And most of the time, right, we are always in how to say that very surface level analysis that is like 50-50 like that. So for example, if today this company have good earning result, then okay, market go up. So it's always that 50-50 kind of thing. But let's say earning result, market go up, how up is it going to go, or how should you do your risk, at what level are you going to buy? Or let's say if we have a counter such as new, like for example, right, you have a counter such as new, and then you do all kinds of analysis on new, and you come to a conclusion that okay, new is actually good for value. So then are you going to buy right now, or are you going to wait for it to go lower so it will be even more value? So fundamental analysis is good, but it usually cannot be converted into a trade plan. So it is just like one simple analysis that is very hard to be converted into a trade plan. And another thing is that a lot of the fundamental analysis, right, they usually take many years to play out. So for example, if someone analyze that this company has very big growth, can grow blah blah blah, maybe that will only come through like 10 years later. So it is more for like long-term investors rather than short-term trader. Even for myself, right, I think for Nimbus Capital and even for Sonic, we trade on a daily time frame, and for us, our time frame tend to be much longer than all the scalpers and all the like day traders, right? And even for us, where our trading duration is slightly longer, most of the fundamental analysis are not going to come into play. And on the short-term time frame, right, it is very hard for us to use fundamental analysis to make a trade plan, because we cannot convert those into a trade plan. Whereas if we use technical analysis, we can see that okay, this area is supported, so I can definitely place my stop loss there. It can be converted into an action, and that's why most trader we use technical analysis because it's much more effective in the short-term time frame. And for example, right, I can like wait, let me where's my Crosstrack? Just now I was just, let me bring up Crosstrack again. So for example, like the other time, I say here that Crosstrack is actually quite valuable, and it has a very high growth potential. But now Crosstrack is here already. And of course, you will say that, hey, like Zor, you are wrong already, cannot. But that high growth potential, all this, right, they are fundamental analysis. And what if 10 years later, Crosstrack is at like 680, then I can tell you that, hey, I am right. Who asked you to go and like take your loss? So it become a very gray area. it become a very gray area that is very hard for you to make a trade plan. So I hope I explain well. I have been using lower risk per trade, say 1%, holding multiple position of bottom and support trades that are more than 180 days. Should I try to close those bottom trades and support trades? So just leave one kind each as I move forward. 2% risk per position as recommended. Okay, so this one very good question. Okay, so the first thing is, I'm assuming if you are taking 1% risk, and if you are asking this question, I am assuming that you no longer have any capital. Your capital all fully utilized, meaning you don't have any free cash to enter new things. So that is what I am trying to infer. And if you are taking 1% risk, most likely you'll be holding about I think close to 20 position you're probably holding close to 20 position because I mean is a strategy that most of my trainee use. So I'm kind of like familiar with the numbers lah. Can I confirm that? Can I confirm that? Can I confirm those two points? You have no more free cash, and you are holding about somewhere between 17 to 20 positions. Or are you or are you looking at your portfolio? Okay, so for the rest of you, right, what he is trying to ask is that because I recommend you take 2% risk per position lah. If you take 2% risk per position, right, and if you follow my trade recommendation, most of the time you'll be able to enter like 8 to 10 position lah, given your capital. It doesn't matter whether if you have like 10K, 20K, 30K, or like you will somewhere come up to about 8 to 10 position. So personally for me, right, I take 2% per risk, and you can in my open position, I'm holding about, let's say, nine position like that. So I'm somewhere between this range lah. So if you go down to 1%, right, in 1% risk, right, it means that all of your position are now half in terms of your lot sizing. And which means to say, if all your position are half in terms of lot sizing, your ability to enter the position, right, you'll probably have 16 to 20 positions lah. So he's asking that most of his positions, they have been there for like 180 days already, so quite long lah. But in fact, like for some of my trade, we have gone up to like 200 days like that, like a few counters lah. So my advice is that if you have nothing else to enter right now, you can hold on, you still hold on to them lah. If let's say market start to recover and most of your trades start to hit TP, right? Then and you see there are other good trades coming up, then you can choose to exit those more than 180 days. Because the thing is, right now, market is not really bullish. It is in fact quite ranging. It has been ranging for quite some time already. If you look at S&P 500, right, we have been in this range since like November. So it is going like November, December, January, about 2 months plus already. We are going into like our second month, two month plus lah. So when the market is ranging, right, and if you are still holding to all those counter and they have not hit the stop loss yet, right, I think you can still continue to hold them for now. Because let's say if you exit those counter and then you have your cash free up, and your cash is being free up during a weak market period, right, then whatever you enter is probably not going to do very well. Also, you might end up back in that same situation where whatever that you enter will still be stuck lah. And in fact, during this period, right, we are actually I'm personally deliberately trying to provide less trade setup because of the fact that market condition is quite weak. I don't want to anyhow give trade setup also. So another way to sort of look at this position is, since most of your capital is all utilized, right, you look at your past 5 trades, and if your past 5 close trade lah, and if your past 5 close trade, right, if majority of them are in a losing position, you have cut loss, then it is better that you don't exit those positions, because the fact that your past trade losing means the market is still weak. So maybe you might want to wait for market to recover a bit, give you some sign of like bullish, then you see that things are going back up and you see more bullish setup, and then you can exit those stuck position to enter the new position lah. And this is one of the way how we try to build up the discipline also, because if we anyhow exit to enter new counter, right, it is okay if you are in a bullish market, that's still fine. The punishment is not a lot. But if you do that in a weak market like now, what's going to happen is you exit and then enter, then the enter one stop, like, and then you exit the new entry, then you enter some more, and then this whole process repeat. And within that weak market period, you can compound a lot of loss. Whereas if you just hold on to those counter, right? Maybe if they hit the stop loss, then you will incur that one loss lah. But at least during that weak market period, you are not going to incur so many loss, because things can be a very slippery slope in a sense that, okay, this time you exit because 180 days, then the next time 100 days, then the next time like 90 days, then like then you will start like exiting after 20-30 days already, and it's not good also lah. So I hope I answer your question. And the second part about moving forward with 2% risk, right? If you are comfortable with 1% risk, and if your capital is big enough, so when I say big, I mean about maybe 50K to 100K. If your capital is somewhere within that range, right, and you are perfectly comfortable with 1% risk, meaning the amount of position that you are holding, you are managing them fine, right? Then I think you can continue to stay at 1% risk lah. But of course, if you wish to go into 2% risk, then any new counters that you add, you can slowly move into that 2% risk. For you, will you cut Microsoft, Meta, and Nvidia when it hit 2% loss? I don't understand your question. So I mean, we will definitely cut when we hit the stop loss lah. Currently, I believe there's only one trade recommendation on Microsoft, which was in the video. So in that video, there is a stop loss level given. Okay, there's a stop loss level given, and you have to go and calculate your lot sizing. Okay, so let's say, for example, let me bring up Microsoft. Why is it that counters that I want to find always cannot find? Sorry. Okay. Wait. Ridiculous. Sorry. Microsoft. Okay. So for example, let's say if you enter here, then I believe in that video there was a stop loss given. I think that stop loss is somewhere there. So you need to go and calculate your lot sizing so that when price drop from here to here, you will only lose 2%. So once you calculate ready, then you buy with that lot sizing. So now when the price hit the stop loss, we will definitely exit lah. And when we eventually exit because of stop loss, then you will only lose 2%. It is not like I randomly buy like a big lot sizing here, and then when the price drop until here, and then I exit because now I lose 2% already. It doesn't work like that. So you have to look at the stop loss level, and then you go and find out what is the lot sizing that you should buy. So it is not like I just anyhow enter 10 lot, 20 lot, 30 lot, and then when my account go down by 2%, I will decide I should hold or not. That's not the way to trade. So it is always follow the stop loss. Use your stop loss to calculate your 2% risk. How many lots you should buy to get that 2% risk. So I hope I explain well. And currently, Meta, AMD, Nvidia, I don't think there's any trades on Nvidia and AMD. There is analysis on Facebook, but for Facebook, we are still waiting for the breakout. So yeah. Well, yeah, let me go back to some of the analysis that was asked. Okay, COPX. Let's look at COPX. Wow, it's already 10. Copper minus ETF. This one looks okay. This one looks okay. But this one is a ETF. So when you look at ETF, right? It's for if you are trying to analyze ETF, you can't really use volume to analyze because because the ETF price tracks the whatever that is trying to follow lah. So the volume itself have no impact on the price movement. So it doesn't mean that if today there is like a lot of buyer coming in, price will go up. It doesn't work like that with ETF lah. So you have to be very careful when trying to analyze volume with ETF. But this one, it does seems that is like finding a good support and there's a good price movement up there. So we can use this as a very good support level. And if let's say the as long as price is above like maybe here lah, as long as price is above maybe like 32 like that, I think this is quite okay lah. But as with all ETF, right, I think they are not really meant for trading, but rather you just put it as part of your long-term portfolio. Or perhaps you want some exposure to minerals, metals, all this, then you just slowly add small. But so far, in the past 1 year, in this very recent time, right, you will notice that all the mining company, mineral company, they are doing quite well. They are doing quite well. Olam. Okay, let's look at Olam. Okay, Olam, right? Olam is a counter that come up on the scanner once in a while lah. So there was one time it came up like somewhere here, and then it came up somewhere around also here. So I also some of my training also came at us whether Olam is worth buying or not. So normally when I see counters like Olam, right, one thing I will look at, right, I think this one is a very simple analysis trick is that whenever you look at a counter like this, right, just zoom out a bit to see like the overall trend. And if you see that the overall trend is usually down, right, then maybe to be safe, you might want to avoid it altogether because it's not really that safe, because at any point, right, suddenly a lot of seller can just come in and the whole thing will just go all the way back down again. But regardless, we have this very nearby resistance that is still there lah. So like if you enter here, then there is a resistance here. But in very recent price movement, we have the attempt to break the resistance, and now it is like still kind of going inching up like that. So in a way, right, you can use this level as like a support if you want to trade. But at the same time, this level, they are very close by lah. So I will not say this is one resistance and then this is another resistance. I will just take it as this whole zone, right? This whole zone is actually a resistance. And then after that, on top, we have another resistance right here. So we are looking at a lot of resistance that is very, very close by. So it is like a high risk with very little reward, I would say. And not only that, right, if you look at the price movement of this chart, of the chart itself like this, right, it's very slow. It's like one day move a bit, one day move a bit, one day move a bit, like a snail taking one small step at a time. So from a trading perspective, right, I don't really like Olam also. Until we see some kind of a very good catalyst from a fundamental perspective lah. But even for its fundamental, right, there are a lot of like issue with Olam. I'm not sure if you remember, like back here we have all the muddy water issue, and then Temasek have to come in and build out. But even then, right now things are things are not really improving very much. Things are not really improving very much. So if you want a long-term counters like Olam, I think Wilma is a better choice. Because at least at this point, we do see like this so-called uptrend attempt. At least we have broke quite a few resistance, and then now it is like right back at the support, which compares to Olam, right? We still have quite a lot. We have quite a lot of layers that we have to break through lah. Just wondering, should we top up our sum of money during the year to trade, or fix 50K a year and just play with that? Okay, so this the question of whether you should top up your trading account or not. So the first thing is, of course, first you need to see for yourself that you must be profitable. So in the past, right? In the past, when I first started trading, I start off with 25K lah. So actually during my newbie years, right, I lost 25K. I mean, I win, I lose, but eventually my 25K become like 5K. My 25K become like 5K like that. So after that, I have to start from scratch. I have to save up again another 20K to get back to 25K, and after that, I went through a very long period of self-reflection and a lot of back testing, a lot of digging, and that was the point where I finally understood that how much back testing and forward testing and data collection is very, very important, because it is through data collection we get to see what works and what doesn't work, and we get to see how we improve ourselves. Because trading is not that straightforward. For us trader, right, we always think that if we win money, we are doing the right thing. If we lose money, we are doing the wrong thing. But that is totally wrong. That is totally wrong. And most traders don't realize that. Because I mean, that's the most obvious like thinking, right? I win money, so of course I must be doing right lah. How can I be doing the wrong thing and then get rewarded with profit? Cannot be, right? So the fact that getting a profitable trade, our brain immediately equates to doing the right thing. I mean, okay, I'm trying not to be offensive, but in a way, right, we are all like dogs, you know. It's like if we have a positive reinforcement, right, we think that what we are doing is right. I mean, I was like that lah. I was like that back then. But in trading, right, I think most of you will hear me say this a lot of time. You can do the wrong thing and you will still get profit. For example, like you try to, for example, in this case, you go and like contra YOLO, I don't know lah, like maybe your entire buy limit on your poem account, you contra here, and then 3 days later it went up like this, like okay, it went up like by 4%. Not a lot, it's like a very tiny end bite, but because you contra with all this money that you don't have, and just nice it went up 4%, right? You get like maybe, I don't know, like maybe 20K profit with no upfront capital at all. And then because of that, you think that, hey, I'm my strategy is good, my strategy is correct. So and then you keep doing this over and over, and what will happen is that not only you will lose that 20K from this trade, right? You will end up owing your brokerage a lot of money lah. So trading is not that simple. Trading is always like, if you do X correctly, first you must do the X correctly. If you do X correctly, then you will have 65% chance of making a profit. But if you do X wrongly, right, you still have that 35% chance of making the profit, and you better pray and hope that you are doing X correctly and you are not getting that 35% chance lah. So it is important that you must be profitable for a long period. You cannot trade like 1-2 weeks and then you profit and then you assume that whatever you are doing is the right thing. So if you can be profitable, let's say for 1 year, you can, my recommendation is, when you are first starting out, right, like you just want to know whether if you are doing the right thing, your strategy can work, and you want to collect data. So this one I cannot stress enough. You must collect your data. So if you are in that stage, right, I strongly recommend you start off with like, let's say 20K. You start off with 20K and then you just like trade for that 1 year lah. Just try to get familiar with yourself, get familiar with the strategy, get familiar with all the data collection, the forward testing, troubleshooting. And within that 1 year, once you have sufficient data and you see for yourself what are the things that are doing well for you, what are the things that are not doing well. And once you have made sense of that, right, and you use all those numbers to calculate whether you are profitable or not. So if at the end of that 1 year, you realize that you are profitable, or your strategy seems to be doing what you want it to do, then next year you can top up. And then from there, you hope that you can repeat the same thing lah. And if you have sufficient 1 year data, right, most likely you can repeat your success. But let's say if you go into the first year of trading with like all your trading capital all throw inside, because you really want to earn a lot of money, like what, this one confirm I'll win now, win now. Then within that first year, during that data gathering period, all this, right, like you realize that you are not doing well, but because you put in so much capital, right, maybe like half your capital gone already, and by the time that you figure things out and you like trade for good, you probably have wasted quite a lot of your capital already lah. And that is how most new traders they fail is that they lose all their capital during that learning phase. They never got out of the learning phase with their capital intact. And all my course trainee can attest to you that during the training, right, I emphasize the use of paper account, because the purpose of the paper account is that you can go through this period without really losing your money. You can actually follow your strategy, follow all the rules, and then you can see how you perform, and you try to make it as real life trade as possible lah. It requires discipline lah. So it removes that needs where you have to lose real money to learn. You can learn using your paper account, and that is how we use paper account. That is what the paper account is for. The paper account is not there for you to have 1 million capital, you YOLO the entire 1 million, and then you get 10 million, and then you screenshot, share here, share there. It's not meant for that purpose. It is like Strava, you know Strava, like the sport app where we track how our heart rate, how fast are we running. It is to improve ourselves. But if you use Strava to go and like show off here, show off there, trying to cheat to beat the top record, then that's not going to help you lah. So my advice is, make sure you are profitable for 1 year first. And then if you are confident already, right, when you are comfortable and confident, you can top up. And that feeling of comfortable and confident, right, it is, you will know one. It's like it will come to you automatically. Like you won't think twice one. You will immediately know already. Because if you trade for 1 year, and that 1 year is like a lot of retracement lah, bad market period lah, but towards the end you still come out positive and alive, right? Then you'll be like, oh my god, I made it. That kind of feeling lah. Like for example, in 2021, right, last year it was a very bad trading year. But if at the end of the year you can like somewhat around like maybe 30% return, 35% return, somewhat can meet the slightly above the S&P, right? Then you are good already. You are good already. Like maybe you might make a mistake here and there, but all your basic discipline are there, and you can next year, right, just do what you do. And if the market is like perform better, the luck is in your direction, right, then you are going to option tradings. Okay, option trading is actually not bad. Sorry, when I say not bad, I don't mean like the Wall Street bet style, you know, you go and buy like 30 call option YOLO, and then hope that you win very, very big. Meta in the ticker symbol. Sorry, let me get back to you on that. Okay, let me tackle the option first. Sorry. Yeah, so personally for me, right, option have their use, and most of the time option strategy they are there to complement your stock trading strategy, like for example, covered calls. And there are some option strategy that are very useful also, very useful. And they are very low risk and can make money easily also. But most of this strategy, I'm not sure if you might heard before, there are things like the butterfly, the iron condor, the vertical spread, all these kind of strategy. And these strategies, right, they are actually no difference from stock trading, because the return is like somewhat there, is like it's not a huge amount of return, because the strategy in itself, right, it already have a preset amount of money that you can lose. So it is like an inbuilt stop loss. If you use that strategy, right, there is no way you are going to lose more than this amount. There is like simply no way you are going to lose that amount. But a lot of YOLO traders nowadays, they don't use option with that kind of purpose. They don't trade option with that kind of intent, but rather they use it in a more gambling manner, where they just want so to them, right, stock option is more like super leverage. It is like a CFD account, but it is like the leverage is even bigger. So the way they trade option is as if they have a small capital for a trading account, but with a very, very big leverage. Because if you try to use all the option strategies like iron condor and the long straddle, vertical spread, all these, right, the amount of capital you need is actually quite a lot. But I mean, that's my personal opinion lah. And in fact, if we look at things like futures, right, like commodity futures, the purpose of these commodity futures is for the big corporation who use this commodity to lock in a price. That I think futures was created for that purpose. But the thing is, there are a lot of futures traders with big leverage trying to speculate the price lah. So we have things that are not used for the purpose it is intended for. And of course, options from its very first inception, right, is meant as a hedge to your large holding. It is designed for investor who have millions and millions of position in a particular counter, and they just want to pay like a few thousand to hedge their loss. That was the purpose of option. And that's why we have the VIX, also the so-called the fear index. The index itself is I think is the ratio of your put and call option. It is to see how many people are hedging against how much, and if that hedging is like a lot of like big investors are over hedging more than what they are supposed to, right, it shows that the general sentiment of the market is very fearful. So that's how the fear index comes about. And now the whole option is, it has reached another stage now, where instead of its intended purpose, people are using it as a leverage. So if you want to use option as a form of leverage, right, then I mean, you just open a CFD account lah, because CFD accounts, right, you don't really need to bother with the strike price lah, the expiry date lah, all this. You just go and, like, I don't know, go and open a brokerage that have like 100 times CFD, and then you can play it. Like, it's even more simpler lah. But if you want to use an option to complement your stock strategy, then they are definitely useful, and they are very good so-called passive source of income lah. Okay, I wouldn't say passive also. They can complement your stock strategy to kind of give you small copy money lah. Okay, sorry, let me go back to the matter. This one, round hill ball metaverse ETF. Whoa. this one I don't what this ETF is about. ETF as I mentioned just now, right, it's hard to do technical analysis on ETF, because the price movement is like whatever how this price moving, right? It is not affected by buyers and sellers, but it's affected by whatever it is tracking. So if you look at gold ETF, right, I can't perform analysis on gold ETF. I need to perform analysis on gold. But gold is simple because gold is just gold. But if you have a ETF that has like 30 companies or 100 companies, it becomes very hard to analyze. This one, okay, so it have gaming, Roblox. So okay, so is all the all the metaverse stuff lah. Okay. At least we got top 10 holdings lah. So you got Snapchat, Taiwan Semicon, Unity, Roblox, Microsoft, Nvidia, Meta. Okay, I can definitely see where what causing the whole big drop. Probably Roblox is one of the one of the culprit. So one thing you need to take note about this ETF, right? I think it started out not long ago. It just come out not long ago, and excuse me. And this is the so-called the fact sheet lah. And I think as long as you know the top 10 holding, right? You are pretty much good already, because wherever the top 10 holding takes you is wherever this stock will go lah. Like for example, like our STI, right, is mainly just the 3 banks lah. So based on the performance of the 3 banks, the STI ETF will move accordingly lah. So for this ETF, then it's probably this this 10 lah. So but the thing is that you need to know this ETF, it only start last year July. And when you look at last year July, right, so we just look at the top 3 lah. Okay, we have Facebook, Nvidia, and Microsoft. Just nice, I have those 3 counters. Okay, Nvidia, Facebook. Why Microsoft always hard to find? So sorry. Microsoft is always like hiding somewhere. Okay, so we have Facebook, Nvidia, and Microsoft. Okay, so the matter it started on last year July. So let's look at the performance of Nvidia, Microsoft, and Facebook from last year July. Okay, so for Facebook, last year July is like here. It went up, then suddenly come down. Then for Nvidia, last year July, somewhere here like sideways, went up, then come down. Then for Microsoft, July went up, come down. So we have this similar pattern lah, from July somewhere until November, right? Most of them are going up, except for Facebook, which went up much earlier and come down much earlier. So most of them are like that pattern lah. Okay, go up and then down. Microsoft go up and then down, and for Meta also go up and then down. It's just that go up earlier, come down earlier. So when we look at this ETF, right, we can also see similar pattern from June, like go up, and then now it is coming down. Okay, so if I cover the name, if I don't look at the fact sheet and I look at this, right, then this is definitely like a very bad chart. Like I don't even know what I am looking at also. But if you look at it in terms of this top 10, right, then maybe you can somewhat understand what going on with these counters, going on with this ETF lah. So if the tech finally start to recover, right, so if Facebook start to break the resistance, if Nvidia finally able to like break out of here, like the retracement finish can finally break out, Microsoft also like recover, right, then you will definitely see this ETF recover also lah. You will definitely see your ETF recover also lah. So for this ETF, right, you cannot look at this chart alone. You cannot do technical analysis on ETF, because whatever this chart pattern is, right, is dependent on what these 10 counters are doing. But you also have a few, I will say risky stuff lah, little bit risky stuff. You have Roblox there. You have Snapchat also. You have Unity. I think Unity is still quite okay. So this is a very gaming gaming based ETF. Like I think Amazon is also involved in some gaming stuff. The Unity software is a gaming software, so it is like both semicon chip maker and gaming matter, that kind of stuff, you know. So the good thing is most of these counters are big cap counters. Hence, if you want to invest in this, right? If you want to play this, your only way to play this is to invest. You go and do dollar cost averaging, or you every year, right, try to go and like average down lah, because as long as all the big cap counters, right, like your Facebook, Nvidia, Microsoft, they are doing well, right, or maybe even Amazon or what, if in the next 10 years time they will definitely do very well, then your this particular ETF will do well also. Yeah, I think it is a metaverse as a whole, but of course currently right now we have, like, I think currently all the chip makers are, they very jialat. They very jialat right now. They have been dropping quite bad, and we have yet seen any sign of recovery lah. So short term you are definitely will see this like suffer a bit. But I think long-term investment point of view, not trading, not trading. If you want to trade, you go and trade Microsoft or Nvidia or what, but don't trade this, okay? So, yeah. So, but in a long-term investment point of view, right? I definitely think that this one you can hold lah. You can hold. There's enough safety net companies for you. There's enough safety net companies. So it is not like 100% like do or die counter lah. Okay, wait, let me TSN, yes, TSN jumped last night, but the I don't like that it close rate leh. It does jump, but it's like yeah, close rate lah. So I'm okay. It's at then some more it gap down today. Hopefully it can go back up green lah. It is a very good optimist result that it beat the estimate, the net profit record breaking. But the fact that I think it close rate makes me kind of like and also because when companies like TSM make profits, right, I will believe that the overall sector as a whole, they will kind of like join in with the optimism as well. For example, if I am an investor and I see that this semicon industry is this particular semicon company is making profit, right, very good profit, I will also expect other semicon to like of course other semicon that has the enough compatible market shares lah. Like you cannot compete Tesla with some Chapalang like Nikola, that kind of counter lah. But maybe for TSM, right, maybe companies like AMD or maybe Nvidia, they will also go up to join in the optimism, right? But sadly yesterday AMD dropped so much. Then I was like, the morning I was wake up like, before I went to bed, right, I texted in my trainee group chat that hey, TSM gap up so good. I hope that other semicon counter will go up to join in the optimism lah. But when I wake up, the candle is like this, then Marvel dropped so much, then other semicon dropped so much, then I was like, oh my god, I jinxed the whole thing. Like what's going on? Yeah. Yeah lor. ETF okay. Wait, sorry, let me I think I missed a few stuff. Okay, so sorry for Jerry that asked Nvidia and AMD, right? So since we are talking about Meta, I will go through these two also lah. So chip makers, they are currently doing quite bad. Not quite bad lah, they are just retracing lah. If okay, let me open up the 200 moving average. Okay, if we look at Marvel, it's still very strong uptrend, very strong. It's still so far from the 200 moving average. And if we look at AMD, it's still very far. If we look at Nvidia, it's still very far. So if we want to look at it in a perspective of chart pattern, right? What you are seeing here is like a bullish flag, like they are all bullish flag. And if we want to look at like the general retrace that counters tend to have, right? So currently Nvidia top to bottom retrace about 25%. And I can tell you that for stock, right? 25% is normal. It's normal. It's like almost any other day like that. If you look at counters like Tesla, is even worse. And like from here to here, it trades about okay 14%, like not as much as this, but I think this one it was gone up to chongster lah. Then from here to here, it's about 23%. You can see this one, like it actually retraced 23% before it start to go all the way back up. And usually when we are trading all these kind of charts, right? Of course we want to buy here and then profit here lah, but we at some point, right, we are definitely going to like end up buy here and we need to hold through the retrace. And in fact, right, Nvidia, this trade, our last trade, we actually have to hold through that. We have to hold through that period. You can see we have to hold through this retracement period, but eventually we get that big run. So you need to be able to hold through this kind of retracement, because the thing is you never know when they are going to come, and they can actually come quite often. And if you get scared out by this kind of retracement, right, then you will never ever able to get this kind of big trend, because as mentioned earlier, right, the only time where the probability of you buying and go straight up is about 15%, 17%. And those are not going to happen often. And even like the way earlier, this one is like way back in April. This is before the stock split, like this one still at $600 before the stock split. So this trade, right, this particular trade is actually here, this trade. So it also went down before it started to go back up. And I think this is like the same thing, but it's just happening in a bigger magnitude, Like if we like kind of like scroll in here, right, it is almost the same, almost the same pattern. But here it is just a bigger magnitude. So of course, as traders, right, we cannot assume that, Zor say eventually will go out, so I go and buy here, I'll go all in, chong in here, and then after you chong all in, it retrace some more, you cannot tahan the loss, and then finally when you cut, this whole thing go up. And that's one of the reasons why, right, you will never see me giving trade setup that is intentionally buying into this kind of pattern in hope that it will eventually go up. At least what I want to see is like some kind of a bullish candle or some bullish action, or at least like a higher low, at least a higher low. Then maybe we can consider that higher low. That's why currently for Nvidia, AMD, AMBA, I think for those who are still remember last year, we have AMBA also. We have AMBA like somewhere, we bought somewhere here, and then we TP like here, and then we hit second TP here. Then after that, we just leave it alone already. We don't care already. And even for AMD and Nvidia also, the only semi-con counters that I believe we are holding right now is I have recommended whether you guys buy or not, I don't know is Marvell we are holding Marvell right now because the trade setup came in here and then of course when we buy here, right, we hope that it goes up but now it's coming here, so we just hold through, we just follow our trade plan. Okay, so similarly for AMD, it's exactly the same if you look at the chart pattern, right, it's exactly like the Nvidia like that. There's not much difference. Okay, next one, can do DCA on Nvidia and Meta Microsoft. Okay, so if you want to do DCA, right, definitely can, but you need to be mindful of your overall portfolio and your overall goal, your overall goal of your this strategy. What are you trying to achieve? Are you trying to achieve a very super growth kind of pattern, or like, is there something else that you are trying to achieve? So let's say, right, let's say you have a lot of risk, you have a lot of STI ETF, and majority of your portfolio is already heavily weighted into risk already, and hence you want to balance that out by having this kind of growth, high growth company like Nvidia. Then yes, you can average down, but you also need to ask yourself, you want to average down until what weightage? So it's like you have your portfolio like this, and then currently your portfolio, for example, your portfolio is 100% REITs, 100% REITs. And then now you want to start average DCA Nvidia. So how much do you want to DCA until your Nvidia is like how many percent of your total portfolio weightage? And you cannot DCA until like your Nvidia suddenly become like taking up 50% of your entire portfolio also. These are things that don't have a straight answer. I cannot give you a straight answer. These are very, very dependent on what your situation is. For example, I dollar cost average STI ETF, and a lot of people tell me, hey, why you sell STI such a weak market? Why not you dollar cost average S&P so strong? But the thing is, I don't need growth. I don't need growth in my portfolio. My trading account is my growth. It's already beating S&P most of the time. Most of the time. Like when it beat S&P, it beat S&P very strong. But when it cannot beat, right, then it's like very jala those kind. So that's why, in order to balance out my trading portfolio, my growth trading portfolio, right, I balance it out with STI ETF. But not everyone will be agreeable with. If we look at STI in a vacuum, not everyone is going to be agreeable that it is a good counter to, it's a good thing to DCA. But based on your strategy, based on your overall portfolio, right, it is something that you can consider. It must fit your overall strategy. And if you are already, if like entire of your portfolio is in like Vanguard S&P ETF, or some of the funny stuff that Cathy Wu is buying, then if a lot of your ETF already have Nvidia, right, then there's no point for you to go and like purposely average down Nvidia by itself also. Because if you average down an individual stock like that, right, you have to realize that the diversification is not there. Number two, I think the transaction fee is quite high also because if you average down things like ETF via a share builder plan or a unit trust, the transaction cost is much lower. So there are this kind of thing that you need to account for. And let's say you are only averaging down like $200 per month, then your transaction cost is like $2-3. It become 1-2% of your transaction cost already. But if you are going to average down $2,000, then also once again is 2,000. I don't know your total portfolio how much. So is that $2,000 like your entire like disposable cash every month? So too many factors. Yeah, I think conviction is good. Is good, but of course, like no matter how big your conviction is, right, you still need to ensure. I mean, your conviction can never override your risk. Your risk comes first, then second your conviction. So it's a very, very important thing is that, okay, like my for example, for every trade I take, right, for every trade I take, my conviction is that it's like, for example, Apple. If I say Apple stop loss here, right, like no matter how low it go, I have conviction in my Apple trade. But once it hit, right, then my stop loss is like, okay, that's where my risk is. I cut, and then after that I will reassess. I will reassess. Of course, that is a trading perspective So if you have conviction in long-term investment, right, you need to first identify where is the conviction coming from. So for example, if you think that it is the earnings, it is the growth factor, then you need to really go and identify, okay, what are the growth factor that I find it interesting? Okay, if the growth factor is the metal, what are the metal projects that they are involved in? And you need to keep constantly updating yourself with all these development, because maybe right now the company is in this current state, they are doing this project, that project, and all these projects give you that conviction, right? And maybe 2 years later, all those projects fell apart, they don't succeed, they start making loss, right? Then that is where you probably need to cut your loss lah. So in investment, right, your so-called the cut loss comes from like not just the price itself, but also all the fundamental aspect. Whereas in trading is much more simpler lah, where once we hit a certain stop loss level, once a certain important structure is broken, right, then we, of course, we are out of the trade already lah. So I mean, this one is just a general advice lah, is that when you say you have conviction, right, it is good to like at least sit down and ask yourself, okay, where is this conviction coming from? Sometimes we can have conviction because another person have very strong conviction and you are just simply following that person, and it can become like, like it can turn into something not good. Okay, everything is green, but why is S&P red? Why is S&P red? Still good to see 21 people here. Any more? Any more questions? I hope the discussion is like giving you guys some values, and I mean, overall, I hope they can help you guys lah. Also sad, Ford drop already. Oh, okay lah. Somewhere here, still all right, still all right. So you can see, right? You can see for Ford also, our original position was here. Then after that, it dropped quite a bit before it start to go back up there lah. So these are the kind of things that we cannot predict. So just now, for the guy who asked AEM, right, is, I think this is a good, I would say, example. So for example, we buy Ford because it break out of this consolidation, and of course we hope that it shoot up lah. But it didn't, it come back down, so never mind, we just follow our stop loss and then it immediately go up lah. But of course, if you are purposely waiting for it to come back down then buy, right, then I think it is something different already. I think you might need to, I don't know, you wouldn't simply buy just because it's coming down, but maybe you are buying in somewhere here where you start to see some green candles. I hope you got your trade journal ready. Do you get it? I give out quite a lot on Wednesday or Thursday. I spent almost 4 hours emailing every single one. Like my hand pain ready. Okay, okay lah. Oh my god, it's 10:51. Yeah, I mean, yeah lah. US market open 10:30. Okay, so I will stay until 11. If by 11 like there's no more stuff, right, then we call it a day lah. Okay, so while we, US market is closed on Monday. Okay, Excel point is the Singapore counter. Excel point. Not bad. Actually, Excel point came out on scanner before, I believe, but I forgot when. I forgot when it came up. 9 Feb. 9 Feb? Like last year? or is it 9 Jan? Last year 9 Feb. If last year 9 Feb come out, this one, this candle here. This one here. Maybe leh. Wait, let me go and dig. It's you see, it's good to have data, you know. It's good to have data. Who know later 9 Feb really come out? Wow, 准下 Excel point. 9 Feb. Good to have record, good to have data. Okay lah. I think back then, I I probably avoided this because of this and this. But I think it should have came out somewhere here also. It should have came out somewhere here also. And I think I probably missed it lah. Probably missed it. So this one very sad, very sad. One of the gem that I missed it. I think that's the whole purpose of me sending sending the scanner also, is that sometimes I will definitely miss things lah. In fact, a lot of my trainee pick up a lot of things that I didn't I missed them, and then after that when they have profit, then I'm like, hey, why you all never join one like any house, yeah? Like, but at the current price, right? Definitely still bullish. If I were to trade this, right, it will be a speculative trade. It will be like I just YOLO here and hope that this whole thing still continues to go up, and it doesn't go down lah. So by YOLO, right? By YOLO, what I will do is like maybe I will put my stop loss below, okay lah, below here lah, at least below this 4 candle here lah. So it's a YOLO trade lah. So if price come back down, the momentum is gone, then I don't want to hold really. I just want to be out of the trade. So most of my speculative trade falls into this kind of chasing counters lah, where I will have a very tight stop loss, very tight loss, way tighter than all my usual trades. Because if it retraces, right, I want to be quickly out, mainly because there isn't a good place for me to place stop loss in the first place lah. Like what I can't place here is too much really. It's too much really. So if I cannot place properly, right, then I will go to the other extreme. I just anyhow place and grab as much profit as I can. Yeah, all in AIA. AIA, correct. But of course, when I do this kind of speculative trade, right, there are a few personal rules that I follow lah, which is that okay, you can anyhow place your stop loss, but of course you don't buy here and then your stop loss is there lah. That one is like random movement, also you out already. If it really does go up, maybe you're not even in the trade anymore. So for example, you can see here, like if you like YOLO contra here, right, then you definitely, and your stop loss is like don't know, a bit only confirmed out already. And even here, right, even here you can see that like if your stop loss very tight, you'll be out. So you still need to meet a threshold lah, some kind of a threshold lah, okay. So then I will place a threshold like agak lah, and I will still follow like my 2% risk lah. Okay, what are the tech stock that I have? Let me go and open my portfolio. Actually, I'm quite heavily I'm a bit heavily weighted in tech. And in fact, last year I made quite a number of mistakes that cost me quite bad, quite jialat. I think you all should know. Firstly, I doubled down on PayPal, which ended up in a very big loss, very big loss. $5,000. It's like, oh my god! Like you see, most of my loss like 3,000. Then suddenly this one jumped to 5,000. Yeah. So and the second biggest mistake was that I have overexposure to electronic and semicon counters lah. So even right now in my current position, right, I am still heavily exposed to semicon counters, and that is one of the biggest reasons why my portfolio is currently year to date at negative. So for those who is not as bad as me, exposed so much, right, I think you are definitely doing better in 2022 for now. For example, currently I have Nvidia. You might want to consider that as a tech counter, but there are certain things that okay. So when it comes to profit taking, when it comes to stacking or winning trades, when it comes to shifting stop loss, right? These are strategies that is cost training only lah. It's because they are a little bit complicated, that cannot be teach or cannot be shared in just words and webinar alone. I do need to like one-to-one consult, one-to-one coach that kind of level or complicated lah. Hence, for most of the trade, right, there's a TP given to you. But for us, right, when price hit the TP, we tend to shift our stop loss here and there, and there's a proper amount that we shift so that we don't get cut off when the price retrace, that kind of stuff. But don't worry, even our decision are only made when the TP level is reached. So if the TP level never reached, right, and it go hit the stop loss, right, then we still take the loss anyway. So in that sense, our strategy is the same lah. So the TP level in the trade recommendation, right, it is a minimum level. Once it hit the level, right, whatever you want to do, you can do already. You can like take TP everything. You can take 80% of your position, take 70%, or you don't take at all. You shift your stop loss to entry, break even, whatever you can do, whatever you want. But that TP level is the so-called decision making level lah. Okay, so just now we were talking about Nvidia, right? I do have quite a big Nvidia position, and what you will notice about that Nvidia position is that where's my hot takes? So if you will have noticed that we actually have two trades set up on Nvidia, and in fact I have one trade set up from here. Then after that I have another trade set up which is here, and I took both trades set up. So at each TP level, right? At each TP level, we will TP a certain amount, but we will leave a certain amount behind so that if it continues to go up, right, whatever that we left behind, excuse me, we call it the trailing profit. So it will continue to trail as the price go up, right? Then we can like catch the very big trend lah with that trail that we have. So this Nvidia is actually a trailing profit from my initial two position. And in fact, I have a third position that I went in as a YOLO. I went in as a YOLO. It did not came out as a trade setup. And you guys will be glad that it did not came out as a trade setup because it was right here. It was right here. But the reason why I was able to went in as a YOLO is because I have that trailing profit from the first two positions that are sort of helping me to like hold this counter lah. You can see that even if it retraced so much from the top, right, my average is still profit by about 2007 because I'm all this trail at this point here, they are sort of soaking up the bit lah. So it in a way, right, it kind of like helps you in terms of mentally improve your discipline, and of course when it suddenly turns up, all these positions are going to become an even bigger and bigger profit lah. So that's how we write our profit. It's just that this strategy, right, when it comes to this kind of market retrace, market weakness, it will suffer a bit. It will suffer a bit, but that's the price we pay for very, very big wins towards the end lah. So I have Nvidia. So Tesla, I don't know if you want to consider as a tech or automobile company. And then this is where you will probably see all the overexposure that is coming in. Grand Venture is a semicon. LSCC is a semicon. Franken is electronic. And so yeah, so I have probably 4 counters that are kind of like related to tech, but they are more like hardware stuff rather than like software, like, you know, like Microsoft, Google, Facebook, which are more software on the software side, but I'm more heavily exposed to the hardware side, which at that point, right, at the point of my trading, I didn't take note of it. It's like everything green, everything profit, then chonga. Then after that, when I saw my portfolio drop so much, I was like, hey shit, what's going on? And then after that, I saw that hey, almost half of my position are in semicon counters, and I didn't even have Micron, which is the one that is doing quite okay lah. And yeah, I have Key, which is the banking. I have Ford. So even here, Ford and Tesla a bit overlapping lah. But Tesla is also my trailing profit. You can see that the trailing profit very obvious. It is only my weightage is $2,000 only, 2,000 out of like 130k. But it has the percentage return wise is 46% return lah, because this position is worth 2008 and I already have like 1,003 as profit. So it's close to 50% rate. Of course, the original position TP quite a while back lah. So yeah, so I got, I don't know, 4-5 position if you want to count the hardware, but I'll probably wouldn't count the count the hardware as tech lah. Like through tech, right? I have very little. In fact, I am looking to enter Apple. I'm looking for an opportunity to enter Facebook or Apple. Apple, when that opportunity came, right, I have no cash. Then for Facebook, I'm still waiting for that breakout. I'm still waiting for the breakout. But if that breakout come, right, I have enough cash to go in. So I'm kind of like waiting around, waiting around for things to come. And you can see that even though I have cash available right now, I'm trying my best not to anyhow enter. So when I bring up that video about the 3 big tech counters, right, the counters that I have in mind was Apple. Apple, but it's still kind of like a little bit shaky right now. So I in fact, most of my position here, right, I already have the support entry. So I don't want to go in for another support. Maybe I want to wait for Apple to break out of the resistance first, then I might make another actual trade setup, official trade setup, or maybe see Facebook breakout first. So these are the things that you really need to think lah and make decision for yourself, because at that level of detail, right, there's no way I can help you really. It's very like is really one-to-one really. I have to help. But of course, these are still important decisions that you need to make. Make sure you don't overexpose. Make sure all your positions are not like bottom picking everything that is like dropping very low. Make sure you know which are your best performing strategy, and make sure most of your position are in that category, that kind of stuff. Okay lah, my losing stock you confirm have lah. You don't have Franken meh? You don't have Grand Venture meh? I think Propnex also, Propnex I cut very, Propnex cut very hard pain leh. It's like the stock version of getting my heart broken. Airbnb also I cut. in fact in the past 3 months, I cut, I took quite a lot of loss lah. I took quite a lot of loss. My highest last year, right, it was 44, and towards the end of the year I dropped to like 32, like that. That was like 13% drop in my total capital. It was loss after loss after loss. But it's not the best. I mean, it's not the worst trading performance I have lah. So, but most of them were result of me doing things that I tell people not to do, but I own self go and do. So yeah, I mean that one is on myself lah. Nvidia, you shift stop loss only. Okay, yeah. So the TP level are decision making level. So yes, I shift stop loss only when TP is hit. So because let's say you have a counter like this. Let's say you have a counter like this. Imagine you have a counter. Okay. Wait. I think this one is a hindsight. Let's use hindsight. Okay. So let's say you enter because of breakout trade. Not really hindsight lah, because we have a legit trade here. We have a legit trade here. Okay. So let's say I place an entry here, and then my stop loss is here. So very simple. Very straightforward lah. Very straightforward. Nimbus Capital classic trade. Okay, very straightforward. And then my TP is like here. Okay, so my TP is there. So I put my stop loss like that. I put my stop loss as a red color. Okay. So next day, price go up here. Then when price go up there, and then you think, wow, price go up enough already, so you shift your stop loss to break even. And then what happens is come down, take you out, and then go up. And it happens. it will happen. You can see that happening. Like it will take you out and then it will continue to go up. It will continue to go up. So you need to account for a few things. You need to account for like things like when it retraces, what is the usual amount of level that the price retrace. So if this is going to retrace 17%, okay, how much did this retrace? This retrace 15%, you know. This okay. This retrace 15%. Okay. So this retrace 15%, meaning if the price have not gone up by 15%, right? You cannot suka ship your stop loss because it will cut you out when it retrace and then it will rally. So these are things that you need to watch yourself lah. Watch yourself because because the reason why you shift stop loss is to like get more profit, to limit your loss, but end up what happened is you not only you limit your loss, right? You also limited your profit, and then like the whole position is gone. And when this happened, I tell you, you were angry 100% max. Ford, GM, Tesla considered same category? Yes, I will consider Ford, GM, and Tesla same category. Tesla maybe a bit half-half, hard to say because it's frequently argued topic, like is Ford an energy company, tech company? Is it an automobile company? A lot of people say it's not automobile. I mean, look at the amount of car that Ford is making compared to Tesla. It's like Tesla like cannot make it. But I mean, of course, like we cannot when trading, right? Sometimes it's good to be a bit dumb. Like, okay, Tesla car, Ford car. So okay, let's just be safer. Let's always take the worst case approach. So they are cars. So yes, you can better safer to choose like just one of them. And also the reason why I have Ford and Tesla is because just now I mentioned Tesla is my floating trail, the small piece that was left behind. So I already taken my main profit in Tesla. What is it? My Tesla profit is so small. Yeah, my floating profit is bigger than my main profit. In fact, my main profit is like $8,000, but I got 1,004 profit, so that's like less than 25%. But my floating profit is like 46% already. Yeah. So I mean, it's a floating profit, so I'm not worried about double dipping because at most, if everything like falls and everything like drop, right, Tesla will get buffered by the profit position I already have. Then it will be that Ford will be the only risk I'm taking now. Hey, did Ford go up? Did Ford went up? Did Ford go up? Oh no lies. Oh yeah, it did went up. It did went up a bit. The TP is at 27. I'm waiting for 27. 19%. Yes, nice. It's my saving. It's the only thing that is holding my current portfolio up. It's the only key. Key is at 666. I summon the devil. Yeah, but Ford is the only thing that's holding my entire portfolio. And that's why, right? That's why you will see this the diversification is important. Diversification is important even when you are trading, because like sometimes even if the whole market uptrend, right, there will be this bunch of like joker sector that for some reason going down, don't know what's happening. yeah. So it's good not to double down. In fact, if I diversify even more properly, right, I wouldn't have these three counters together or maybe Franken Grand Venture still okay, but I wouldn't have add on LSCC because I already have Nvidia, and before that I also have AMD and AMBA, and AMBA I also have AMD. So at one point, right, I have like 7 position on semicon industry. So yeah, so I think my position here would have been better lah if I try to be more vigilant. But I mean, what done is done lah. What done is done. That's why that's why you will see. I mean, like things like Costco, right? I don't really care so much because they are it's a number one, it's a classic trade, and number two is just like I mean, it's a different industry lah, different industry. So normally that's how I go about choosing. So if it comes down, right, it is perfectly fine also because I feel that other industry are going to go out, then it will balance out, and eventually one will hit the TP first, then the other one will catch up and hit the TP. Then like this is short-term unrealized loss, but eventually everything will start to hit TP lah. But if you have like overexposure in one particular sector, and if that whole sector go down, right, all your counters will start cutting loss left and right, and it will be very chala really. Yeah, and you will also see how come I have a golden agree like out of nowhere also. So this counter also, it doesn't bother me a lot because it is one of my so-called the bottom trade setup. It's a bottom 17%. Grand venture, your grand 7%, down 7%. Oh, you mean my allocation? Yes, my grand venture. You can see grand venture, Fracken, and Nvidia, all like almost I don't know, 45%, almost 50, half of my portfolio. Correct. But okay, grand venture, I have to I defend myself a bit. Okay, I defend myself a bit. It has taken quite a bit of profit already, I believe. Where's there. I already locked already cash out grand venture because I think for those who have been following us like quite a while back, we have grand venture like since June 8th, where it was like still a baby. It was still baby in my cradle, and I watch it grow up. I watch it grow up, and after that we have a second trade here, which was like the teenage years, and it also hit. So at every point, right, at every point I will enter, and at every TP level I will try to lock that bit of profit lah, so that even when the whole thing come crashing down, right, at least I lock some profit already. So as I add in more position, and as my old position start to trail all this, then you will see that it has a very big weightage, or it will become like a very big weightage. And that's why Fracken is also a very big weightage, because Fracken, like same as grand venture, right, it was way back here, like 2020. And during the, oh my god, you can see all the Fracken trade setup. We watch it grow up, and this one very heartbreaking also. If this one hit stop loss, I will heartbreak lah. Actually the later trade setup hit the profit already. Hit the stop loss already. But I didn't have this trade setup lah, because my trade setup was the earlier trade setup. It was slightly lower price lah compared to this. So it's either or lah, because both are open, right? You don't double down lah. It's either or. Okay, so Fracken is also one of the counters that I like stack, then it eventually become like 14%. But Fracken, even though with all the stacking, is 14%, because when I first start to stack Fracken, right, it was like way back in 2020, my total portfolio have not grown to this amount yet, so the position was smaller lah. Whereas when I start to enter grand venture, the position have already, as my portfolio already grown by quite a bit, like somewhere here already, was like mid 2021 already. So for those who have been around since 2020, right, we do have a big profit on high P. Hype was the best possible scenario. I have like 4 or 5 position that I stack. Then after stack all profit, eventually it was privatized at an even higher price. So imagine like you buy here, you buy here, you buy here, you buy here, then eventually it privatized here, and then you eventually get the whole thing also. So a lot of people will think that, hey, lucky lah, wow, heng ya, taikus ya, but it is because of my strategy that I eventually managed to get this kind of thing. Because if I do not have this strategy in place, right, and every time it goes up a bit, I just take money out like hide in my Milo can, then no matter how many privatization offer your trade seller get, you are not going to get that offer lah. So it was because of that IP that pushed my portfolio up by quite a bit lah. Then after all the portfolio rebalancing through into my investment, blah blah blah, I managed to start 2021 with a much higher capital. And when Grand Venture came, right, my base position is higher lah, because I'm always taking 2% risk. Remember, I'm always taking 2% risk. So if I have 80K, then my 2% risk is like how much? How much is my 2% risk if I have 80K? Shit, I failed maths already. I failed maths already. 80K times 0.02, 1,006. Okay, 1,006. My risk is 1,006. Okay, but if I have 100K, then my 2% risk is 2K. So meaning my position is bigger. So yeah, lor, so that's how it is. Oh, Hype was the congrats. Hopefully you haven't given back all the Hype profit lah. But it is one of the best trade lah. It is one of the best trade in 2020 lah. In fact, Hype, when we enter Hype, right, it was along with Franken. In fact, I would say if you have Hype and Franken at the same time, right, even with this drop, I think Franken is still much better performance lah. I will think so lah. Yeah, okay. Sorry, from 10:30 now 11:30 already. I think this has been the longest time. But I mean, I do enjoy discussing and talking about stocks also. I mean, it's part of my passion, which is what I like to do also. And of course, at the same time, I do hope that you guys manage to get some insight or get some things that can add value to your trading journey. Okay, so if you still remember with our the new timetable, right, we will have this session twice every month, but of course I will also try to see the attendance lah. If one day only 2 or 3 people attending, then of course I might scrap lah. So normally I try to experiment a lot of things to see what people like, what people doesn't like, and if the response isn't good, then of course I won't force lah. I will see if got any other things that you guys will prefer or not. So okay, so I'll be ending this session already. Thank you guys for coming and all the questions and all the good discussion. So I mean, in the future, if you can, if you want to speak, just open your mic and like just say, hey, hi Zor, and then I will give you like, okay, like the mic is yours, you can speak lah. Okay, so yes, sleep liao. Don't worry, tomorrow. Hey, Zehan. Zehan is the only guy that understand my humor. He's the only guy that understand my sarcasm. You are my true fan. You're my true fan. In this world where people get offended very easily. Yeah, don't worry. Tomorrow is Saturday, so yeah, can sleep as late as we want lah. I'll probably stay up, watch the market a bit. Marvel recovering. So you see, like very like if you just put your stop loss and adjust your risk properly, right, this kind of thing you can sleep through one lah. But if you YOLO very big lot sizing, every day is like super hard attack one. Yeah, okay, sorry. Have a good night, guys, and see you guys tomorrow, the usual webinar. Bye. They all look like Nest. Okay, so JN, I will try to see your trade journal again to see whether I sent to you or not lah. Okay, so let me just go and I'm just taking a break from all the mouse clicking that I did. So I'm planning next Monday I will do another round. Bye bye.